Alright, guys, welcome back to another episode. We're going to try to do the swing trading and the day trading together in this episode and see if we can get it down to one video a day. So let's get right on into it. Now, for those of you all who do not know, I look for my stocks in the morning based on how they are moving and what percentage they have gapped up or gapped down in the morning, and then from there I also weed through them by looking at their shares float, which is how many shares are available for trading, and I also look at the reasons behind why they're moving and things like the shares the short float, so the shares that are out um for available to be lent out by the banks to be shorted. So that and you so all all that together gives you an idea of, and also the volume. So you want high volume, you want low float stocks. These stocks are gonna the reason you want these is because a lot of people will be trading them and well they will move well with patterns. They'll be more reliable in pattern recognition. A stock that has a large float and low volume doesn't react as well to points of resistance and things like that. So I'm sorry I couldn't explain that better for you guys, but if you don't understand, do some research and keep watching these videos, and you can definitely learn from my mistakes, if nothing else. Now, so I had five stocks I was watching on my watch list. Over here, you can see on the left-hand side, Costco, FEYE, GoPro, IBRT, and Match. Now, after looking through them on a site that I use called FinViz, anyone can use it. It's a free site. I found out I weeded through other uh, criteria that I'm looking for, and I decided that I would only watch these two stocks. Now, I only wanted to pick two today because, as you guys know, I have open swing trades, and both those swing trades were in key locations, which we will talk about later. But I was also watching Kron and Nvidia. Now, that being said, I like to trade, and it you can get big moves in the right at the open. So I like to trade these big gappers right at the open because that's when they usually make most of their move for the day. So I'm watching these two stocks right at the open. Now let's start with IRBT. This is the 4 hour chart. As we can see, it was gapping up, and I made my plan that if it stayed and showed support up over here, then I was going to go long and hope for it to come up and sell for a quick sell. And I was also going to go long if it dipped down into this 95 areas, and um, I was going to go long over that. Now we can see that if I could have got a scalp play up here like my plan said, but if I were to go long here, I wouldn't have been able to get much. And these things never do exactly what you want to, but you can still get moves out of them. Now that being said, let's go in and look on the time frame. So as we can see, if I go in here and show my trades. Alright guys, sorry about that, I had to edit something out. Technical difficulties. So, if we were to watch, this is the pre-market hours for this, and if we were to be watching this, we'd more or less set up a channel in this area. Now, so I was watching this coming in, and we dipped down right at the open. We dipped down here, and I actually my I wanted to go long on a dip to 95 to 96. So this was my area where I wanted to buy for a dip. So I watched it, and I could see that it was kind of reversing, and I wanted to go long, but I didn't trust myself, and I passed on it. And if I had, guys, let's call this $98. Sorry, $98 up to $104. That's $6. So if I would have just gone a simple 100 shares, that would have been $600. So was a very low float stock. So this only had um, 27 million shares traded. That's between 20 and 10 is extremely low float. So I don't have a ton of experience with these, but you can see the potential in these types of stocks. So what I actually did was, if we look here, this is the okay, so this is the 1 minute. After it shot up, a lot of times when these stocks come break this level that we have up here, that's pre-market, where you can see it was established a sell in pre-market. Besides this anomaly, but that sold off real quick too. If it comes up here and it stays up there, once it broke through this level, a lot of times it'll just keep on running real hard, or they'll just barely pull back to this white line and then keep running. So that's what I was banking on, and I bought, as you can see, I bought, guys. Okay, guys. For one more time, this is the 1 minute chart. I bought right here on this pullback after each one of these candles is 1 minute, so it shoots up, and you can see how it sold off right here and then shot up and then pulled back. This is where I bought on the pullback. And let me tell you my reasoning. This is a specific strategy called the fallen angel strategy. That's when a stock is gapping up huge like this and then sells off in pre-market as soon as the market opens. So it keeps it low level. It stays support all pre-market. As soon as the bell opens, it sells off. Okay, it sells off. Then it gets support down here and reverses. That's a fallen angel, and then they'll keep running. They're rare. They don't happen as much as normally they'll just keep running. They won't do a big down and then go. But this happens too because shorts, people who shorted right here, people who sold shares right here and anticipating for it to go down, who didn't cover in time, once the price came back up, they got squeezed. They had to buy their shares back in order to cover without losing more money than they already had. And when they bought their shares back to give back to the bank, the price went up because they drove the price up even more. So that's why you will get pops over these lines. So it popped up as soon as it broke this line. I said, okay, I know normally I'll wait to buy outside these channels or play off and get close to these two lines of pre-market because I'll set my stop loss on the other side of them. So that'll be more safe. But in this scenario, I did not. I bought right in the middle of this pre-market channel. So that made me nervous, and I went long 100 shares. And this stock is so low float that the 100 shares, it was actually pretty, maybe a little more than what I should have been going with. But I immediately did math in my head and set a stop loss, just scrambling. And so we bought at 101.73, and I set my stop loss, I think, at the break of 101.50, just because. So 101.50 is right here, and I bought at 101.73 right here, 75. I set my stop loss, but my stop loss it did break through on this stop loss, and I was down about $50 or so, or $60, and right at my limit, and I was literally about to go hit my order to buy back, and I hesitated, and it went back up, and I thought, and that's why you don't want to set your stop loss at some random price level. I should have set my stop loss right here. Oh, sorry guys, I'm so sorry about that. Let's just zoom in right here on the top of this red candle because that's where all the shorts went in, and this is where they're. So that's as long. So a lot of, as we talked about, the shorts piled in here, and then when the price drove back up, they had to buy their shares, so you get a pop up to here, and then more shorts come in and short it down, and then the problem is, then buyers who see this fallen angel, they think it's a good buy, so buyers come in hoping that the stock's going to go up. So then the stock goes up, and then these people who shorted here get squeezed out, and then more people short here. That's how it works. So hopefully that clears that up. But I went long here on the down candle anticipation of this move, and we got the move, and I was up pretty decent, but I scaled out and minus 50. I tried to get I bought at 101.73. I tried to buy back at 103.96 up here near the top, 103.80s, 103.90s, which would have been a huge gain. I was up big, like two or three hundred bucks, and as soon as I hit my market order, the price dropped. So maybe that was bad. So I might use a limit order next time. So I got filled all the way down here at 103.40, which is up here. So it's a decent fill, and I took another one out on this drop, and I was up like 110 bucks. Yeah, 110 bucks on that trade, that little 3 minute trade right there. So if you guys don't know what time frame I'm in, you can always look up here. This is the 1 minute chart, so it would have 1 minute. And I had one, so that was my first trade of the day, and then I only had one more trade on the day as far as day trading goes, and that was actually on the same stock, IRBT, iRobot. And here we are we're still on the 1 minute here. Let me just remove these drawings real quick so I want to take these drawings off so we can see things clear now. So we're still on the 1 minute chart. Let me zoom in a little bit. Here's the trade that I took earlier when I went long here and went up here. Now later in the day, we can see it ended up reaching up to 104, and when I sold out of my position, it ended up dropping down after that. Now I stopped watching it, and I came back later on the day at 10:30 or 10:20, and I saw that it had, and this dotted line, guys, this white dotted line here is the VWAP. So for those of you guys who haven't seen my other episodes, this white dotted line that goes all the way through here, that's the VWAP, the volume weighted average price. It's one of the most reliable indicators as to how the stock is valued on a short-term basis. Um, so when I saw it, it sold off under the VWAP, crossed above it, sold off, then curled back up towards it, and every time it got closer and closer to the VWAP. And a lot of times when a stock curls up like this, it's a good sign that it's gaining support. So I actually went long right here, 100 shares, um, at 101.03, and my stop loss would have been under a break and close below the VWAP, which would have been at about $100.90. So it'd be a 13-cent stop loss on 100 shares, so my max loss would be $13. Now I held through 3 or 4 minutes of chop around the VWAP, and a lot of times if you don't get if it starts to curl up like this and the move takes too long, it's better just to get out, because if it takes, and there was also not much volume here, so I actually got out of the trade at 187 cents. So I got out for a $14 loss, and right afterwards we had this massive red candle. So I stopped out there for a $14 loss, and that brought me to a $95 total gain on the day. Now, I said I was going to do the swing trading in this episode too, but I don't have time, so I'm going to go over my swing trades in the next episode, guys. So overall with my day trading, I feel good about today. I'm up $94, $95, and I only took two trades, and that's the reason I only took two trades. I want to keep my profits. I don't want to push anything, guys. It's really stressful to have to take trades, and it's hard to watch these charts all day long. So you gotta be careful how you do this and take your trades selectively. So I feel good about how I've been doing so far, and I'll see you on the next video where I'll cover my swing trades.